Not biking.
I can do it.
Oh, yeah.
Oh,
thanks.
there you go.
All right. So this is us, guys. I'm Brenda, Vivon, Maisie, Natalie there at handling Zoom, and Tammy that isn't here, but we're your team that can help you with the search of the home, the property. Marisol's going to come up next, but Marisol is our lender. She's the bank, right? She's the money. So we wanted to share this. We love this. This is it was just released by the California Association of Realtors. And just listen to this, guys. The typical homeowner gained 6 figures in wealth over the last decade. What's more, homeowners saw their debt drop by 21%, and many more were able to refinance and lock in a lower rate than 4% in the months following the onset of the pandemic, which helped save thousands of dollars in interest rates over the life of the loan. The top 10 areas with the largest wealth gains for low-income owners were all located in California and exceeded $290,000. So if you guys needed like a reason as to why invest in real estate, I think that's really powerful. I mean, statistics show that homeowners owe less money. They have less debt, and you have more equity, whether it's paper wealth, whether you're willing to do anything with it or not is up to you, but you actually have wealth in your home. We wanted to share this slide. This is a really interesting slide because everyone talks about 2007 and 2008 when prices were super high. Remember that? Super high, and everybody was like, their prices are never going to be this high again. They were the highest ever. People that bought in 2007, look at the peak in 2007 and look at where we are as of 2022. Like even people that bought at the absolute peak, the property values are still in some cases double what they were in 2007. So statistically, prices are increasing. We had, that year where, there's a couple years that it dropped a little bit. It was a financial debacle, but overall, obviously real estate is always a safe investment over time. If you're trying to get rich quick, this isn't the class for you. This is for people that want to invest in property. We talk about this all the time, renters, right? I mean, I rented for many years and I was afraid to buy because I always thought I wouldn't be able to, like, what if I lose my job? What if I can't make my mortgage payment? Well, the truth is I always made my rent payment. So it's like, it's just that fear that kept me from buying. So locking in your cost of living, you guys, rents, just like home prices, have increased a lot over the last decade. And honestly, over the last year, when you look at rents, what they were a year ago and now, the reason you buy is you lock in your cost of living. Once you buy, you know exactly what your payment's going to be, and they can't come knock on your door and rent, increase your mortgage rate, right? So you lock that in. This is a cool statistic. 92% of the world's wealth and 90% of millionaires acquired it through real estate. So,
that's super important.
Super important. And then this is what we're going to cover today. The fears and the facts about buying, the realities of our market today and your situation. Because at the end of the day, like, it doesn't matter what's happening in everyone else's life. You have to look at your life and what is realistic for you. Can you afford to buy? If now is not the time, then maybe we need to put you on a path. Maybe in a year you can buy, maybe in 2 years, maybe you need to wait longer. Maybe you're ready tomorrow. It's really looking at your situation. We're going to go over the 10 simple steps to home ownership, which you guys, I mean, that we don't want to bore you and overwhelm you today. Once you're ready for that, we'll go through it in detail, but Natalie's going to give us a brief summary of what that looks like and then the next steps. So we'll start with the fears and facts about buying. And this is number one is like, I can't afford to buy a home right now. And Marisol can speak to this because she's our numbers person. She's our lender and talk about what that looks like for budgeting.
Mm-hmm. So this is one of the most common fears that I hear. Marisol, I can't afford to buy a home. And I always ask, well, what are you doing today with your living situation? Are you currently living with family? Are you currently renting? Are you living rent-free somewhere? It all depends on your living situation. And 9 out of 10 times when I sit down with a first-time home buyer or even a secondary buyer or an investor, they can afford to buy a home. It's just that the fear of the market, fear of what you're hearing on social media or the news. So it's super important that you take the time to sit down with a professional, talk numbers, discuss your income, how much you have in assets. Assets can be so many things. And we'll talk a little bit about where your down payment can actually come from a little bit more down the line. But most importantly, how to budget is one of the key things. So that's one of the number one fears that I hear. Second fear, I don't have enough money for my down payment. We talk about where the down payments can come from. Sometimes you have a 401k that you haven't touched, that you've been saving money for your retirement, but you're still kind of far off from retirement. So we look at your plan and see the description and how it allows you to utilize it to purchase a home. So we have that option. Sometimes not, we all don't have this luxury, but some people are too fearful to even ask family for help. Like, hey, would you give me a down payment? Can you help me get into the market? A lot of the times we have parents that would be willing to help, that we just have to kind of ask them and say, hey, we're ready to buy a home. What can we do? Grandparents, we have clients that are like, hey, they ask grandparents and they're like, hey, I can help you. Can I gift the money? A lot of people don't know, but when you buy a home, you can actually get 100% gifted down payment. You don't have to give any money from your own pocket in order to purchase a home. Now, if you don't have, obviously we all don't have that luxury to have a family member that can gift us a down payment, but I'm just throwing that as an option. Fear, I should wait until the market gets better. This is the number one misconception. I hear clients that haven't bought that said, oh, I should have bought 3 years ago. I should have bought 2 years ago. Why didn't I buy yesterday? And I tell them, hey, if you're ready today and you can afford the mortgage payment, why not get into a home? If you're not looking to make a quick buck in real estate, if you're planning to live there 3 to 5 to 7 years, it's always a good time to invest in real estate, because regardless if we have a little bit of a dip or we don't, because we all don't know what's going to happen in the market, it's really important to look and see your own budget and when it's a good time for you. I can't afford to buy a home because my credit isn't very good. You sit down with me and I give you ideas on how to repair your credit. Sometimes it's as easy as going to get another credit card to increase your capacity. So I don't know if you guys know a little bit about credit. If you have credit cards and you're utilizing more than 30% of your balances, your credit score is going to plummet. So even as simple as going out and applying for another credit card, not using it because of course now you're going to have more debt, but getting more capacity. That way you have more revolving available balances that helps increase your credit score. That makes up 30% of your credit score, is having less than 30% utilization on your credit. So that's a key thing. And we talk about everything like, hey, Marisol, I had a collection account. If it's more than 2 years old, I tell you don't touch it, because the minute you touch a collection account, then it restarts the date from the day that you actually make a payment. So little things like that. We have a lot of different ideas that we can give you to repair your credit if credit is an issue. But now actually lending is getting a little bit more lenient when it comes to your credit. I'm sure you've all heard people with higher credit scores are going to be penalized on the market. Everybody's talking about that, right? So what I usually say is, don't believe everything you hear in the news or on social media. That's not true. However, the industry is trying to help people with lower credit scores get into the market. As long as they didn't have like a foreclosure or some kind of bankruptcy, we definitely have programs that can help you qualify for a home loan with a FICO score as low as 580. Now, obviously, that will impact your credit score and all of that. It's, the best rates are going to be for someone with a higher credit score. Programs, some banks are a little bit more strict on what type of programs they will allow borrowers to have with the lower credit score. Usually we're always going to go the FHA route when you have a lower credit score. So we're trying to avoid that. The higher your credit score, the better. So we'll give you tips and tricks on how to do that as well. And then fear, I cannot afford my dream home. None of us can afford our dream home for the first time. Yes. Our first home is never going to be our dream home. And I think speaking about thank you for saying that. We will eventually will be able to afford our dream home, but as a first home, your first home is never going to be your dream home. You're going to make it your dream home either by sweat equity or by purchasing a condo and you selling that condo later on and using that to purchase your second home, your dream home. It's kind of having a more realistic, we live in California, right? If everybody chooses to stay here where they're going to purchase, it's going to be a little bit more tricky to get our dream home in California. So you have to look at the 3 most important things that are important to you. Location, is it size, where you want to be? Do you want to have 10 bedrooms because you have a large family? Then maybe moving a little further might help. Just being realistic with your expectations will definitely help you get into a dream home. Number 7 is fear of buying a second home seems way too complicated. This is actually a very common misconception buying a second home is actually the least complicated transaction I've ever helped someone do, because you're buying a vacation home, and I'll walk you through steps on like exactly what the parameters of a second home, what that means. But buying a second home is super easy. We have someone in this room that bought a second home that was super easy. And it's such an easy transaction, and you don't need 20% down like most people think.
But I think what we should talk about, and,
Yes.
and I'm glad he's here, but is using the equity, like people that bought in
Yes.
the last 3 to 5 years because of what happened right now have a couple $100,000 in equity. So people think like, I need to have money saved up. Well, you do, right? The equity in your home, it's paper wealth if you don't put it to work. But if you put it to work, you pull a home equity line of credit, you pull money out of that, out of your home, and use that as your down payment. So you don't need cash in hand. But people forget their biggest asset is their home. Let your home work for you, but you have to start somewhere, right? Even that little home, that little condo can end up building the wealth that you need to end up buying that second home.
Yes. Sorry. Number 6. Oh, I'm going kind of out of order, but that's okay. I should wait until I'm certain about my domestic future. No, you really shouldn't. Anybody that's single can purchase a home. That's not a problem. You don't need to wait to see if you're going to have a partner down the line. Unless you're looking for something that's out of your budget and you need more income to qualify, but that doesn't necessarily need to be a partner. It can also be a co-signer, can be someone that can help you qualify.
We laugh about that all the time when
Yes.
we're selling property, and people say, well, I want a bigger home. And I'm like, well, then you need a bigger paycheck.
Yeah.
or
find somebody.
yeah, or a partner in life. Because if it's especially like single income, it's not easy as a
It's
single income person to qualify, right? But you just be realistic. It's like, maybe I'm not going to have the biggest house on the block. I'm going to have the smallest fixer upper, but in 2 years, I'm going to make it look just as beautiful as all the other homes. So we were talking about this earlier about like just living within our means and being realistic, and the problem with social media. And it's funny because I mentioned to the ladies that I went to Air One, which I had never even heard of that. It's this like super fancy grocery store.
Yeah.
And the smoothies were like $20.
Oh,
for a
yeah.
smoothie. Yeah. And there was a line out the door to get these smoothies.
It's a good example.
And I'm looking around, I'm thinking, what is wrong with people, right? Like that's what's wrong with us, right? Like we want to have it all. We want to drive around, have the latest iPhone, the nicest car, the most expensive smoothie, the hyaluronic acid, the collagen, the Botox, but that all comes at a cost, right? So you just have to figure out like, what is most important to you? And Jim Carrey has this amazing quote, bless you. And he says, if you're not willing to sacrifice your life for a year to determine the rest of your life, you care too much about what people think. So maybe maybe you step it down a notch, right? Maybe you're not eating out all the time. And maybe you pack that top ramen. Maybe you're making eggs at home every day, whatever it is. But it honestly, like if you talk to homeowners and talk to people that have built wealth with real estate, they'll tell you there were major sacrifices. They're usually not the ones that look like they're rolling in the deep, right? So I think that's really important as first-time buyers to keep that in mind, because otherwise it feels very daunting and it feels like very unattainable. But if you're in line for a $20 smoothie, step out of line and get back in your car and remember that your goal is to become a homeowner or like a second home.
Yeah.
But there are definitely sacrifices involved.
Just trade it out for Jamba Juice.
Yes.
Pretend like it's
Yeah.
$20.
Make your own juice.
Actually, you can make that smoothie at home.
Yeah.
No, that's a good one. And then another one, this one's very common too. I'm fearful my student debt's going to hold me back from being able to qualify for a home. So right now, a lot of student loans are in forbearance, right? So that means that on your credit shows you have a $0 payment if anybody has a student loan. But with that being said, it is required to either hit you for 1% of the balance on your student debt to qualify. But if you have a letter from your student lending agency and they say, hey, once these are out of forbearance, they're not going to have a payment for X amount of years. If it's more than 3 years, we take that payment completely off. So there's ways to work around it. There's doctor programs. There's different programs that allow, and not necessarily just doctors can use a doctor program. It can be anybody in healthcare where you can remove the student lending if it was used to obviously for your career, which obviously that lending would be for that. But just different options, we would have to look at it. Oh, I think when you move it to that, it moves my clicker. That's okay. Okay.
Oh,
And then
Natalie.
Natalie's turn.
Yes. Natalie's the newest member on the team, so she's the nicest.
I'll take it. Okay, so like everyone mentioned before, we're not going to go super in depth of the 10 easy steps. We're just going to kind of go, skim over it lightly. And then, we want to really focus on our mindset and the process of getting to the point of actually, deciding to buy, finding an agent, and all of this. So 10 easy steps. So you decide that you want to buy, you decide that you're over renting and you're ready to take the leap. Well, your first step would be to find an agent. And in this case, it's really important to find someone that you align with in terms of your values. This is someone that you're going to be talking to almost every day for the period of the transaction, which could be 30 days, it could be 40 days, it could take up to 3 months even to find the place that you're going to end up in. So finding an agent that you really trust and that you're ready to work with for a long time is really important. Now, number 3 is securing financing. So knowing your numbers. This is, of course, really important. You need to know how much you can afford per month for your mortgage. You need to know, what do interest rates look like right now? All of this plays a big part. And this is where someone like Marisol comes into play, the numbers queen. Next up is identifying the criteria, my personal favorite. So what are you looking for? Do you want a condo? Do you want a townhouse? Do you want a single family residence? What's important in your home? Is it the location, or is it more you want it to look a little bit nicer? Does that not really matter? All of these are really important in identifying your criteria. And then finding your home. So this is when we go out and we go shopping, and it's super fun. We make these appointments, we set aside a whole day and check out all of these different properties. And that helps you see, what's actually important to you once you start seeing these properties in person. Then we go into making an offer. So this is where, again, finding the right agent for you is really important, because they're going to walk you through this whole process. Making an offer is essentially like raising your hand and saying, I'm interested. Performing your due diligence basically just means, your offer has been accepted, and now you go through all of your inspections to see, what's up with the house. Is it up to where you're comfortable buying it? So this doesn't come until after you make your offer. So if something like really big stands out and you're not comfortable with it, you are still in a position where you can back out and still get your initial deposit back. From there, we close, which is always exciting. And then you move in and we protect your investment in the form of a trust, which we also have seminars on if you're interested eventually. And then you enjoy service for a lifetime. We like to keep our clients really close to us. Even after the transaction is over, we still keep in contact and like to see how you guys are in your homes. And we're lifelong friends. So those are the 10 easy steps.
Thank you. And I will say, once you work with the VB team, you won't get rid of them ever. And you just won't. VB Dream Team. Thank you. Okay, so this is me. I'm a loan officer at US Bank. I didn't introduce myself. My slide was later on. So I'm at US Bank now. So I've been doing this about 11 years, and I love what I do. I love helping every buyer from any spectrum, first time, last time, middle time. It's so much fun. So here are the 7 steps to financing a home. So number 1, I kind of switched this up a little bit for the market right now. We wanted to talk about like motivation to buy. What motivates you to buy a home? So what is it about buying a home that motivates you? Do you want to stop renting? Are you looking to build generational wealth? Are you looking to just stop paying your landlord's mortgage? Are you looking to build, generate wealth from just being a homeowner? What motivates you to become a homeowner? And then number 2, establishing a budget. So not only a budget about your mortgage payment, we're talking about budgeting your day-to-day. I don't think we do that anymore. We were talking about that today. And ever since we don't have any checkbook registers, I don't think anybody here probably has a checkbook. No one really budgets anymore, right? But we have all these cool apps on our phone that can help us budget. And I think that we can really dive in and take a look at a budget. But when we're talking about budget, I sit down and say, what is a comfortable mortgage payment for you? Realistic, because a lot of people will be like, oh, well, no more than $2,000. And I'm like, oh, I'm sorry, it's kind of hard to meet those expectations nowadays. So we talk about a realistic budget, and then we also talk about what you can afford, because sometimes those two things are not the same. Sometimes you can afford more home and your budget just doesn't meet that. You have different expenses, because remember, when you're qualifying for a home, we're using gross income. So your gross salary is before taxes and total. Then obviously the net. So I always talk about that. Say, you know, what do you want your mortgage payment to look like? And then after that, we apply for the pre-approval. And why it's important to actually go through the application for the pre-approval is because you can't really view a home without a pre-approval. There is lenders that do pre-qualifications, and we'll talk a little bit about what the differences are between the two. And then we'll talk about types of homes you can purchase, where your down payment is coming from, kind of like earlier on, we touched a little bit on that. And then decide your mortgage options. There's a plethora of mortgage options. There is a conventional loan. I'm sure these are the ones that you hear. An FHA loan, a VA loan, a investment property loan. There's a adjustable rate mortgages. There's interest only mortgages. There's so many different options that we go through. So it can be like kind of overwhelming at first. And that's why I kind of do it step by step, because usually on our first time home buying consultation, it can be a lot of information. And the first thing that I always say is you don't need to decide today what program you're going to go with. You can decide as soon as you go into escrow, and even a week after you go into escrow. And then I'm sorry, there's a typo on number 6. Oh, well, that's the one. The LOA means loan. And then number 7 is myths about down payment assistance. This is a big one. I think it's really important that we talk about everything that we hear. Did you guys hear about the California Dream program where yes.
Everyone's like, free money.
Free money. Where do I get it? That program lasted, I think, 8 days at the very max. And I, to be honest with you, don't even think that it really did. They said that they depleted funds. There were so many applications. I honestly think that they didn't have the bandwidth to foresee that many applications come in. And they kind of had to put a halt on it, but they're saying that there was just too many people applying for it and there wasn't enough funds allocated for it. There's a huge misconception. Everybody thinks that if you're a first-time home buyer, you are going to get some kind of assistance either from the state or the government or the city or the lender. Here's the thing. There is a lot of down payment assistance programs, but in order to qualify, there's a lot of income restrictions. So what that means is if you make, usually from what I've seen, it's $77,000 a year is the max. And it depends on how many people are living in your household. 1, 2, 3, 10, they vary on how much they'll give you. For the most part, if you're looking to buy a home and you qualify for down payment assistance, it's going to be very hard to find a home in that income bracket. So they cap at the dollar amount that you make, and that be single borrower, 2 borrowers, however much, but they total it. And actually they use every ounce of your income to qualify. So let's say me as a lender, I'm using your income and overtime and maybe a bonus. They will do that as well. And their income calculations are a little bit different. So what we're doing as a lender is we're trying to find ways to help buyers. Obviously, it's really hard to give everybody a down payment assistance, right? So we're doing it in a way of lowering interest rates, putting no PMI programs where you're a first-time home buyer and then you do a no PMI program. Their Fannie and Freddie removed their loan level pricing adjustments, which means a lot of first-time home buyers are getting a much lower interest rate right now than your traditional secondary buyer or your investor. So there's a lot of misconceptions about down payment assistance programs, and that's always the first thing that I hear. So I wanted to touch base a little bit about that. Here's a little bit about establishing your budget. So identifying your expenses, determining the amount that you're comfortable to spend on a new mortgage, and make simple changes like get out of the Erewhon line for your smoothie. Maybe, just simple adjustments every day, and a little bit of sacrifice will go a long way, will build you a lot of wealth. So that's important that we talk about.
But like usually if you don't have a home, your number 1 debt is usually your vehicle.
Yes.
So you guys keep that in mind. Interest rates with vehicles are really high right now, right?
Extremely high.
So we see some crazy payments right now with car payments. So just know if you want to become a homeowner, usually the thing that's keeping you from becoming a homeowner is a crazy car payment.
Car payment. Mm-hmm. And I will say that the car payments, they do. So as a lender, I hear it where I don't want my mortgage payment to be $4,500, but how come I didn't qualify for $1 million? it's kind of a catch-22, right? But then I look at the auto loan payments and we can only qualify you up to a 45 to a 50% debt to income ratio. So what that means is we only use half of your income to qualify you for a home, because obviously there's other expenses. We have to have their taxes, and there's all these things that we have to account for. So it's really important that we're having those discussions. And sometimes a quarter of people's income is their car payment, and that's huge. So it's important that we're looking at, especially right now with lending being so high and interest rates for auto loans being so high.
And always think about refinancing, like look
Oh,
at
yes.
refinancing your vehicle loan. Some people think like if they have a loan at 10%, they have to keep that loan forever. No, you
Yes.
can refinance your car loans
Mhm.
as well. And that interest payment has makes such an impact on your monthly payment.
Yes. And then there's such a thing as a credit review. I don't know if you've ever heard of that. So it's basically you go with your lending institution and we pull your credit. It's a hard inquiry, and we do a credit review, and we tell you everything that you can do to increase your credit or lower your debt. So if refinancing your car or maybe moving your car, a lot of people actually have vehicles on their credit that don't even belong to them. They co-sign for someone. So getting that car out of your name, if you co-signed, is really important. And a lot of times the person you co-sign for can actually take over their own car at that point. So sometimes looking at that as well. Here's a little bit of the difference between a pre-approval and a pre-qualification. A pre-qualification doesn't mean anything. Basically, they didn't review your income, they didn't review your assets, and they just kind of gave you an estimate of how much you qualify based on the numbers that you said. Formal pre-approval, it's a commitment from the lender saying, hey, we've reviewed your income, we've reviewed your assets, and we know that you can borrow X amount of money. It's so important because that solidifies what you're searching for. You want to have a lender that's well-versed in pre-approvals, because you don't want to be pre-approved for an amount and then have to go back and not be able to qualify for that home. Usually what I do is right off the bat, I send my clients to underwriting to make sure that they get the final stamp of approval. An underwriter is a physical person reviewing the actual file that I've already reviewed. So it's a second pair of eyes on your loan. And it makes you a stronger buyer in the market, and it allows the sellers of the home know that you are very serious. Anything on that, ladies? Can you move it? Oh, there you go. Types of homes that you can buy. So primary residence, you can buy a primary residence with as little as 3% down, depending on the program and loan amount. This can be a single family residence, a condo, or a multi-unit. Multi-unit is really cool because you can actually use the projected rent on that second unit to qualify for more of a home. Usually a duplex is more expensive. So it's important to note that you can actually rent that second unit and qualify, and you can live in one. So that one's pretty cool. And you can buy with as little as 3% down unless you have a VA loan. So veteran loans, you don't have to put any money down. It's 100% financing. Yeah. Second home / vacation. So you can actually buy a vacation home with as little as 10% down, depending on the program and the loan. And then you must occupy a small portion of the year. So time throughout the year, you have to occupy the home. That be a week or two, as long as you're using it as a vacation home. It must be at least 60 miles away from your primary residence. Exceptions can be made because if you live in an area that's resort-like or vacation-like, we understand that you might want to buy a second home closer to your primary residence. Usually it doesn't make sense, which is why that there's this clause. But the only other caveat on the second home, it must be only one unit. If you're looking to buy a duplex or you're looking to buy a multi-unit, it'll automatically be an investment property. But second homes are super easy to do. A lot of people can Airbnb a second home as long as you live in it for a portion of the period that you're actually of the year. Investment properties, you can buy with as little as 20% down. A lot of lenders actually require 25 to 30% down. So this one's one to know. You can actually buy an investment property with as little as 20% down payment, depending again on program and loan amount. And the reason why I say depending on program and loan amount is because it all depends on how high we're going to go on purchase price. So sometimes a jumbo loan can be require a little bit more of a down payment. It can also be a single family home, a condo, a multi-unit, anything over 4 units. It's automatically considered a commercial property. So that's something to know. If you're looking for a property that has more than 4 units, it's considered a commercial property. So you can't get residential lending on it, would be commercial lending on it, which rates are typically slightly higher on that.
And larger down.
Yeah, Larger down payment, for sure. Usually about 30%, anything with over 4 units. Something to note on investment properties is the loan limits on them are actually pretty higher. They're much higher. So if you buy a multi-unit, the loan limit will be higher. So the exclusion to put you into a jumbo loan is actually at 1.7575. So that's something. 1,073,000. Yeah, anything over 1,073,000 is considered a jumbo on a residential single family home. But if you buy a multi-unit investment, the threshold is 1,575,000. And mortgage rates, this is kind of where mortgage rates have been in the past since 72 to 22. So right now, actually today, I'm sure you all heard the Fed's announced another increase. That doesn't correlate directly to mortgage rates. Actually, mortgage rates went down slightly today because of that announcement. So it's always important, if you hear that the Feds are increasing rates, don't think that mortgage rates are automatically shooting up. Mortgage rates kind of already have adjusted enough to kind of absorb the increases. Obviously, you're going to see some volatility in the market. Rates change every single day. But that doesn't automatically mean, hey, rates went up another 0.25% today because the Fed's made that announcement. So keep that in mind. Rates every day are different, and we are an extremely volatile day-to-day market. So if you guys ever want to just get a quick quote from me, I'm really good at just like, hey, Marisol, what does this look like? I'll respond pretty quickly and I'll let you know where they are. So if anybody's ever interested in that. I kind of did a breakdown on a median home price here in California. We did Long Beach. So 917,000 with 10% down, which is 91,700. This is actually a new no PMI program. So what that means, if you put 10% down, you don't have PMI. But here's what the payments look like. And this is why we're talking about budgeting and getting realistic. So principal and interest is about $5,000, $4,948. And then at this point, you can actually select if you want your taxes and your homeowner's insurance to be impounded. So if you put 10%, usually it's 20% down, but if you do a no PMI program, you can select if you want them to be impounded in your mortgage payment or removed. So this is kind of what a payment looks like. And what we mean by PITI is principal, interest, taxes, and insurance. So that's what you're looking at, the median price here in Long Beach. Do you guys have anything to
I
ask?
was gonna say that just touching on the program that you have with the no PMI,
Mhm.
like that's a great advantage to take because anybody who's ever had to pay under 20% down payment, which, you know, a lot of people don't have a 20%, that PMI really adds to your monthly payment. So the fact that right now that they have this program with US Bank, you know, I think that that's a great, you know, help and motivation that you guys can take advantage of. And then even on the previous slide, if you notice on the rates, everyone freaks out about the rates,
Yes.
you guys, but if you look at the trend over years, right, we talk about real estate being a long-term investment, right? When you look at over, like this is not unheard of. We have had historically much higher rates, and we just had the last couple of years where it dipped, and that was untraditional and unconventional. And so we're right back at the normal. So if, you know, you or even people you know and friends, you know, to help them say, hey, we're just waiting, like we talked about, you're always going to miss on starting on your investment. You have to start somewhere. You can't wait for, you know, this magical thing to happen, because when you look, this is your traditional, this is the norm. Get in so you can start building a wealth, because, you know, it may not turn around and have this magical dip, you know, like we did. So just know that
The average is 7.5.
it's
7.51 or 8.5. I forgot. That's the historical.
Yes,
average.
7.81.
7.81.
So we're still below the historical average.
We are. We're below the historical average. Actually, I think what's important to know is that the last 3 years were non-average, right?
Right.
So the last 3 years were not normal. And I think a lot of the time when we're thinking about buying a home, we're reverting back to the last 3 years when the rates were super low. And those 3 years were just not normal. And this is what caused the frenzy. And then also I hear people like, oh, well, is the market going to drop 30%? And I'm thinking, well, we still have an inventory problem. So can you imagine homes dipping 30%? How much of a buyer frenzy that's going to make, and our inventory is still going to be horrible. So I think keeping that in mind, obviously we all don't have a crystal ball. We don't know what's going to happen a year from now, but it's important to know if you're ready to buy today, just pull the trigger, because you're going to regret it a year from now again, right?
Always. Well, and I mean, we had a listing, our Norwalk listing, that we had 200 people come through an open house one weekend. This was about a month ago.
Yes.
We had 23 offers on this property. It sold at about 700,000. So it's that price point, but that price point is still really busy.
Mhm.
So keep that in mind. But I
Yeah.
want to share what PMI is because I don't think
If you want to talk about PMI.
Yeah.
Yeah, because I don't know that you guys know what PMI is.
Yes, great. There's two different types. So PMI is private mortgage insurance. And basically what that is if you're not vested in a home, at least 20% down, it's considered high risk because you don't have enough investment in the collateral. So private mortgage insurance protects the lender from default. So if for whatever reason the home is not evaluated at the price and you go into foreclosure, they protect the lender. What that is basically a certain amount. I actually talked to a client today and they put it in perspective for me as far as how they feel and how other people think of PMI. They think of it as a car payment that they actually don't have the car for, but PMI is not actually that high. I've seen some PMI be anywhere between 250, 150, depending on the purchase price. Another thing to take into consideration is private mortgage insurance is kind of like your regular insurance. If you've been in a vehicle accident, of course, your insurance rate is going to be higher. PMI works the same way. If your credit score is a little bit challenged, your PMI is going to be higher. So it kind of goes hand in hand. And then there's MIP, which is a FHA PMI. And then that one's treated a little bit different because it's government regulated. Typically, it's a little bit higher, but they recently reduced it quite a bit. So mortgage insurance is something that's on a home loan and it can be removed on a conventional loan in 2 years. On FHA, it can never be removed. You would have to refinance or sell the property in order to remove PMI. Does that help? Yeah.
Really quick question.
Sure.
Is it tax deductible at the end of the year?
It is not. It's a great question. Yes. They asked if PMI is a tax deductible at the end of the year. It is not. So you cannot deduct PMI on your taxes. So it's basically money that obviously I wouldn't say it's a bad thing because it helps a lot of home buyers get into a home, right? So if you put 3% down, it's exactly. So it's not a bad thing, but if there's a way we can help avoid it, I always do everything that I can to get the lowest PMI rate. Brenda knows I'm like the PMI champion. I will try to find the cheapest. It doesn't matter if I have to go to 10 different vendors, but I will try to get the cheapest PMI. It's kind of like when I'm shopping for my own insurance. So down payment, let's talk a little bit about down payment and where it can come from. It can come from side jobs as long as it's not you selling drugs. It actually can come from side jobs, savings, parents, in-laws, grandparents, gifts. It can come from your 401k. Today we talked about a little bit about forgotten 401ks. Who has one of those where you leave a job and you have a 401k and you never rolled it over? It's remembering the funds that you have in those 401ks. So it can come from that. It can come from a variety of different places. It doesn't necessarily only have to be a savings account. Because usually when I talk to a borrower, they're like, oh, I only have like X amount of money in my savings account. And I'm like, okay, let's talk about all your assets. And this falls in line for the second home people that are looking to buy a second property. Do you have equity in your primary residence? Can you do a home equity line of credit on your primary residence? Can you pull cash out of your primary residence? That's an asset that we forget that we have sometimes. So it can come from all different sources. However, it has to be sourceable. So you can't keep cash in your mattress and then the very next day go and deposit into the account and try to use that for a down payment. That looks like you're laundering money. I get the question all the time, like, Martha, why are you asking me about my cash deposits? I literally go and make some money on the side and get cash deposits. Do you get a 1099? How are you doing those side jobs? Can we show proof? If you sell a vehicle, easy, bill of sale. And that's another thing too, cars. Sometimes we have cars in our driveway that we haven't driven in how long, and right, it's always a good time to sell something to buy something. So I'm just kind of throwing everything out there that we don't think of. I know it's a little silly, but it's the truth. It's sometimes things that we don't realize we have a down payment already. But of course, it's always the sweet spot. We're trying to get you to 3% down. But usually I'll try to push as much as I can for 5%. 3% gets you into a home, 5% gets you into a lower PMI rate, 10% gets you no PMI. So that's kind of what you want to think about.
We had a home buyer that actually their down payment was a settlement from a car accident. So, I mean, talk about, and yeah, now they're in their dream home, they made $250,000. Yeah, that was 3 years ago.
Wow. So someone's, I don't know if they heard, so I'm going to repeat it. So someone's down payment for their home came from a settlement from a car accident. So your down payment can come from different sources. It's just trying to get creative financing.
Don't get into that.
Yeah, I was like,
Don't get into a car. Yeah, no. Let's get creative, guys. And let's, yes.
That money to use.
Yes. And remember, if someone wants to help you, don't feel bad. If they wholeheartedly want to help you, there's nothing wrong with that. That's actually gonna make them happier than make you happy. So that's always something I want to throw out there. Maintaining your pre-approval. This is a big one. I get the question, Marissa, how long is my pre-approval good for? Well, it's good for as long as you don't change anything in your income, you don't get any more debt, your job doesn't change, because unless it's in the same line of work. So you can actually change your job as long as it's in the same line of work and you didn't go from being a chef to a mechanic. Or, I'm just kind of, so as long as you're in the same line of work, you can actually change your job. You just can't change your line of work. So that's kind of repeated, but good to know. And protect your down payment. So if you have the money to buy a home, secure it, put it in a CD, put it in an account that you can't touch, because it's very, very enticing to, spend it and start using it, but pretend you don't have it, out of sight, out of mind. And as long as nothing changes, I say your pre-approval is pretty much good until you buy, right? But of course, it's technically good for 3 months. We have to repull your credit. Actually, we can push it 120 days without repulling your credit. And once we repull your credit, we can reissue another letter. So, sure.
If you have a career change,
Mhm.
how long do you have to be in that career before it's considered not a red flag for
That's a great question. 2 years.
2 years?
Yeah. Oh, I'm sorry. His question is, how long would you, if you do a career change, how long would you have to be in your new career in order to use that income? And the answer is 2 years. So you would have to be doing the profession for 2 years. You guys want to go over make my app your home base?
I think we can, just so you know, when you guys are ready for the search, there's, I know you guys have there's realtor.com, there's Zillow, but we have, all of us, every realtor has an app that's attached to our MLS. And so you want to make sure that you use one of those applications to search for a home, because you get real-time alerts. So anytime we find out about a property, you'll find out about it at the exact same time. And it's so cool. You can set yourself up for text alerts. If you say, I only want to live on this street in the city of Cypress, then anytime there's a property, you will get notified immediately. So we have programs available to help you with that. But I think right now, we can answer any other questions.
Any questions?
That you have. I think the PMI is always a big one. There's so many acronyms and we try to avoid them, but it's something that people don't think about, right? Like you need a down payment, obviously, to purchase a home. And there's closing costs associated with purchasing a home, right? So it's not just having that down payment. So typically what we recommend for homeowners is you want to have about 5% down, right? If you're going to do bare minimum 3% to 3.5% down, plus another 1 to 1.5% in closing costs, you want to have a total of 5%. So if you're thinking, I want to buy $1 million home, well, let's look at the payment, right? But then you're going to want at least $50,000 at least, right?
Minimum.
And again, minimum. And again, that can come from IRAs. I mean, we have so many home buyers that it comes from retirement accounts that they have. So it's not like, don't think it has to come from a savings account, from cash. It could be from IRAs, but I think the closing cost is a big one for people. The PMI, just know there's additional little, that's a monthly fee that you have to pay. And a PMI, private mortgage insurance, it's covering the lender, right? It serves no purpose. It's a complete necessary evil, but it'll get you into your home. So we have buyers that get in, they pay that PMI $200 for a year or 2 years. So let's say $5,000 total. But within 2 years, they refinance and they get out of it. So yeah, they spent $5,000, but in the end, they made $50,000 because they bought a property because of the equity and appreciation. So, there's all these little extras that you should be aware of, that it gets really daunting. But if you just start with a number, like this is what I'm comfortable with, and this is what I have, or, talk to us and say, look, I want to buy in a year. What do I need to buy in a year? So we can break it down. Well, okay, if you need $50,000 by the end of the year, you need to save $4,100 a month. So we'll break it down. Or if you say, look, I don't think I'll be ready for 2 years, that's fine. It doesn't matter to us. If you want to buy next month, next year, and 5 years, it doesn't matter. We're going to be here and we're going to be available and ready to help you when you are. But the most important thing is educating you. And we talk about that all the time. Like we try to bring to you these seminars to just give you education, right? Because otherwise you don't know. And fear kept me from buying a home, because I was afraid. I was a single income household. I always thought that I couldn't afford it. Nobody really took the time to sit down with me and really dispel the myths, right? I would just, I just lived in my own echo chamber of it's too hard, it's never going to happen. So I think that's why it's really important.
Yes.
We're really passionate about bringing it to you. And again, it doesn't matter the price point. If you want a mobile home, we can help you get into a mobile home.
Yes.
If you want we're looking at $5 to $7 million properties right now, or we're looking at, $300,000 to $400,000 homes. It's totally fine.
We do it all.
We do it all.
Yes, yes.
And the whole point is just to help you build that wealth. And at the end of the day, the whole point of this wealth, it's not for you guys, right? You're doing it for this legacy, whether it's for family, for whatever it is, the truth, think of why you want this home ownership. Your retirement.
Yeah.
I mean, unless you want to work. I mean, at this point, I think we're all working until we're 90 years old, right? To be able to pay for our stuff. But think about we have so many people now that they live off their rentals. They don't even work. I have friends that are my age, a little bit older, and are $6,000 a month just on rental income.
Yeah,
and
that's
again,
true.
these are people an average income. They weren't making $500,000 a year. They're just average income.
And just to say that too, and just so these people that we know, you guys, and this is why we say it's possible. They started off their real estate wealth on a crappy little condo, somewhere. And
Yes.
And they were able to see an opportunity in order to leverage, we're giving you all these different ways, to buy a second home or leverage your property. It has to start somewhere, and it doesn't have to look grand and beautiful. And that's the problem, we talked about social media or the TV, is you see these couples and you think everybody's buying their home and it looks big and gorgeous. And that's not the case, you guys. If you're going to start somewhere, it can be a small condo, because trust us, we have helped many clients to start off that way, and they're 3 or 4 properties in, and their income didn't increase that much, you guys. They're still in the same jobs. I mean, it's not like all of a sudden their salary over the last 10 years they're making double. That's not the case. So they recognize being able to use property and real estate to take advantage to it, so that they can have a nice retirement. That's another, factor to think about.
And just to really what you talked about, Marisol, is going through your credit report and just figuring out, maybe you have all these little credit cards that if you pay off $5,000, it'll save you $1,000 in income a month, in debt a month. That can help your debt to income ratio. So that's where Marisol comes in to really strategize and say, okay, you don't have, $10,000, but what in the next 6 months can we pay off this debt that you have? And we've done that for people.
Yeah.
So
and then I'll tell you if it makes more sense for you to just save that money and don't pay it off because it's not affecting you that much. How much you actually qualify, and if you can realistically find a home in that qualification bracket, then save as much money, because we also have issues too where you don't have the down payment money, but you actually do qualify for a home. So we look at every aspect to try to get creative.
That's actually a really good point, because
Yeah.
we have come across fights, and just, that's clients who feel like they have to have zero debt or very
Yes.
minimal. And they end up using their down payment when it would have been the same for them not to have taken that chunk and applied it. So always
Yes.
check with professional like Marisol, because she is going to be able to tell you. She's great.
So we're gonna stick around here for those of you that are here to answer any questions, and for those of you on Zoom, thank you so much for your time. We will let you know the next masterclass is coming up in the next few months. On behalf of myself, Vivon, Natalie, Tammy, and Marisol from US Bank. Thanks, everybody. We'll send you a recording. Thank you. Yay.
Thank you. Congratulations, Val.
Yeah. Good job. Thank you, Marisol.